Hi, Tony Carrion with you. Since the sell-off between April and June that took Bitcoin from $64,789 to $28,957, it has recovered nearly 100%. Of course, this has bred speculation on where its price is headed. Some uber Bitcoin bears, like Jamie Dimon, CEO of JP Morgan Chase, recently declared Bitcoin's worthless. But he added if the bank's clients want to buy Bitcoin, they can give them, quote, as clean as possible access. On the other end of the spectrum is Cathie Wood, the chief executive and chief investment officer of ARK Investments, who's best known for investments in major tech companies that have driven the Nasdaq to staggering heights. She thinks Bitcoin is headed for $500,000. According to her, Bitcoin can reach $500,000 if companies continue to expand out and adopt Bitcoin, and institutional investors set aside 5% of their portfolio to it. Now, in fairness to Ms. Wood, this chart from Glassnode shows that the trend in buying volumes has indeed been increasing among institutional investors. For example, so-called Bitcoin whales, who trade in volumes of $10 million or more, and who are represented by the aquamarine color in the chart, have helped to drive Bitcoin's price nearly 100% up off of its lows. Another article highlights a similar theme of strong fundamentals based on things like improving activity on the Bitcoin network, recovering mining hash rates, and again increasing institutional investment as the catalyst to take Bitcoin to $500,000. But market memories seem to be short-lived. Back in April, right at the time Bitcoin reached its current all-time high, this article appeared, suggesting Bitcoin could push still higher, again referring to exogenous catalysts like growing institutional investment, and even the COVID-19 pandemic, making it a, quote, safe haven, and calling it, quote, the new digital gold. Instead, Bitcoin went on to crash 53%. Obviously, fundamental analysis is not very useful in determining where Bitcoin's price is headed. However, a far better method for price prediction is the Elliott wave principle. Built into the wave principle are tools that allow you to make price predictions utilizing known Fibonacci-based ratio relationships that occur between waves at all degrees of trend. Back in early March, more than a month before Bitcoin's all-time high, I showed this chart in Elliott Wave International's monthly publication, Global Market Perspective. Here we were tracking the completion of a third wave pattern within a larger degree third wave that we thought would be followed by a sizable fourth wave correction. We had cited a target at 58,102, and Bitcoin reached a high of 58,334, which was quite close. As it turned out, it was the end of the larger degree third wave, and we adjusted the labels accordingly. But the wave principle was telling us where to look for a high. Now, of course, Bitcoin did push higher into the $64,000 range, although the move was part of the correction in wave 4, what we refer to as an expanded flat correction. Nonetheless, 58,334 is the orthodox end of wave 3, as we say in Elliott wave parlance. Not only that, on the downside, the wave principle teaches us that a fourth wave correction will often enter the price territory of a previous fourth wave, a guideline Bitcoin followed very closely, as we see in the chart. Now, we do have some preliminary predictions for where Blue Wave 5 may end, which in consideration of our Cryptocurrency Pro Services subscribers I'm not showing here, but which you could discover if you subscribe to our daily service. But as our discussion today suggests, the Elliott wave model is far superior to fundamentals when it comes to modeling Bitcoin's price. Thanks for watching.